Welcome to the LiveSquawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary. Hello, and welcome to LiveSquawk's Market Talk on Thursday, the 30th of October, 2025. On today's episode, we'll be previewing the ECB interest rate announcement due at 13:15 GMT, that's 14:15 CET, and 9:15 EST, so East Coast time. Then we that'll be followed by a presser at 13:45 GMT. Helping me prepare for the announcement will be Eric Culp, European editor at LiveSquawk, and Beat Nussbaumer, founder and CEO of Macro Beat FX. He's an FX macro trader, does his own research and FX. He's an FX tutor, and has been a market professional for nearly 40 years, which is aging him a bit. But then again, I've been around for about that long as well in the markets as well. So hi, Eric. Hi, Beat. How you doing?
Yeah, Harry, thanks for having me. Yeah, all ready to rumble.
Awesome.
Yeah, hi from Frankfurt. All good.
Awesome. Right. Just a note, today's ECB meeting is coming from Florence. They're meeting in Florence. They've gone away from Frankfurt for their, I guess, late autumn break, if you want to call it that. Yes, just for anyone geographically wanting to know where they are, that's where they are. Right, before we get any further, then just a quick disclaimer. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We're not responsible for any losses or gains that may result from following the content on this channel. And with that out of the way, let's get on to the business at hand, the ECB rate decision, as I said today. A quick look at the bank research. This is from Danske Bank here. They expect the ECB to leave the deposit rate unchanged at 2% on Thursday, in line with consensus and market pricing. Data has been close to expectations since the September meeting, and we therefore expect no shift in communication on the assessment of the economic outlook, nor in the meeting-by-meeting approach. We will pay close attention to any new details on good place assessment and what could change. What could change it? They expect a limited market reaction during the press conference. There is a full preview up on our website at livesquawk.com from Eric Culp, titled "Lacking Impetus, ECB Likely to Hold Rates Again," and ask the question, is the cult cycle over? So Eric, over to you. What are your initial views on today's rate announcement?
You know, I'm going to steal the thunder of Karsten Bresky over at ING. He said that if you're going to miss any ECB meeting, this is the one to sit out. They're not going to do anything, I don't think. There's not enough data in the market. He points that out. And the data that has come in is suggesting why do anything? IFO was better than expected. So are the PMIs. So the German economy looks, like it's not as bad as everybody thought. That was kind of borne out by today's GDP number. The German Q3 number came in flat, which was expected. So Germany skirts recession again. And, the GDP number for the Eurozone as a whole was a little bit better than expected, 0.2% versus the 0.1% expectation. And that was what happened the previous quarter too. So all in all, there's no reason for the European Central Bank to do anything. They have new numbers coming in December, new staff data coming in. So, I think they can also sit back and watch how things develop. You never know what's going to happen. In Washington, there's a guy who would, he'll deploy a carrier group if someone looks at him funny.
Okay, fair enough. Beat, from a market professional's perspective, sorry.
Sorry, he just had me track off.
From a market trader's perspective, how do you take that, all of it in its entirety, not the last bit?
Yeah, no. If we talk ECB, I actually by pure coincidence, will miss about half the press conference because I have an appointment where I have to attend to. And I think, as rightly said, it's one we can easily miss. There's just no, there's nothing in it. I think we kind of know that they're done for now. I guess we know that, if you get some external shocks, they might not be done. So I think there's just nothing in it. And I think the market is really more driven by all the other factors, be it the Fed, be it the BOJ, be it, China, Xi and Trump and all this stuff. I just see the ECB is probably just, we just have to get past the time now. But I think this is just a non-event. From a meeting perspective.
Yeah, fair enough. So if we look at some of the data, then has the data that we've seen today moved again? I guess, like you say, in combination with what we saw yesterday from the FOMC, and we'll touch on that. We'll come to that very soon. And overnight news from Asia, really, in the form of President Trump and Xi's meeting, and also BOJ we had overnight as well. Are you just taking a step back at the moment? Are you just holding fire and just waiting to see how things sort of pan out in the short term?
To be honest, I think we sort of entered the stage where maybe we just become a little bit more tactical. It's going to be November next week, so we have like 2 months, probably 1.5 months really left of the year. I think the curveball. I think what you alluded to briefly before the recording, it's very odd that Powell did actually explicitly say what he said, as there was no need to be as specific or leaning as much out of the window. Because if you look at all the recent Fed speakers and, the dissenters and all this and that, you would actually suddenly feel like, there is actually a chance that there's no cut in December. And as Besson just commented a minute ago, he's applauding the Fed's 25 basis points cut, but doesn't like the language. Yeah, of course he doesn't. So I would have thought he had a chance to be a little bit, blame the lack of data, blame the kind of shut down a little bit on being. I think he made it with one sentence when he said, when you drive in the fog, you slow down a bit, and I think that was probably alluding to the lack of clear data. But I played it a little bit with buying a bit of dollar yesterday. I bought a little bit of some of the crosses that would benefit when risk is coming off a bit. I also felt very, very underwhelmed by the whole statements from Trump and Xi this morning. I think risk has bounced God knows how many times in the last few weeks on the back of they meeting and they meeting and they meeting again. And then a lot of the stuff that you see, it was headline grabbing. One headline said fentanyl tariffs cut 50%, but actually, it's not wrong, but they cut from 20% to 10%. Then on the other tariffs, it's like down from 57 to 47%. Quite a few of the topics haven't been discussed. So this is not a can-kicking exercise where some measures have been, extended and on hold for another year. So it's like the whole year is like, oh yeah, we talk, and oh yes, we talk, and so that side is a bit. So I wonder whether equities are finally a bit priced high, but like with all the tech news last night, I'm a bit unsure to say this, but everything considered, the pushback from Powell yesterday, the sort of underwhelming story between the US and China, all the other risks coming back to aircraft carriers and so on and so forth. I just feel like there might be a little bit of pushback in the market that we should see a bit of a bounce in the dollar, maybe we should see a bit of a dip in equities. So that's what I'm looking at, but more on the short-term side. I've pared down a lot of the macro risk because I think the dollar has had a good move in the year and is becoming a bit messy. The yen side is what fascinates me still. While the Ueda was quite a bit dovish and we see a bit an extension of the yen selling, I still think this whole yen exercise could become politically very soon, because I disagree with the market view that Takaishi is fiscal irresponsible. I think when they talk Abenomics, it's not going to be the old Abenomics. I think Bessent kind of warned them already yesterday by, taking a prudent approach to the Abenomics. So I think there's very little tolerance on the US side if Japan would embark on yet another yen weakening sort of story. So I'm not sure if the market is right to sell yen at these levels, where I think dollar yen will become politically very soon. So we have a mismatch of dollar stories or focus of stories, and I think it's quite a jungle out there, to be honest. And I think that's why I'm starting to be a little bit more short-term oriented, because there's so many different avenues. There's no clear narrative where you could just say, oh, this is the story. There's so many fine tunes and tweaks, and I just find it not so easy.
I mean, just for anyone who missed it, then Bank of Japan kept rates on hold overnight. That was the general expectation and consensus. But give it a month back, we were looking for October. Even a couple of months back, people were looking or targeting October as the next hike for the Japan Central Bank. It's more likely now. Some say we might have to wait until we'll wait until the new year before we see any movement from the BOJ, looking for more data. They're always looking for more data, really procrastinating as they are. Bringing it back to Europe a little bit, and Lagarde, Eric, how do you think, with everything that's going on around the world, how do you think she'll try and navigate the press conference? What do you think what will she be asked today? What would you ask her if you had the opportunity to be in the room?
Yeah, I don't really know what I'd ask her, because I think she's going to say it in her statement and then bat down any questions that the journalists pose. I think we're going to hear agile, nimble, data dependent, in a good place, all the talking points that she's been given. I would probably press her on how quickly are they ready to react in case of some major change in the world trade system, or some unforeseen circumstance, because these things that we all thought were unforeseen have all of a sudden appeared in front of our faces, whether it's issues with Ukraine and Europe right now, and the probing of drones and aircraft, or what's the U.S. going to do next? I mean, just one commercial quoting Ronald Reagan, and the talks with Canada are over, and that's going to have repercussions here too. I think people say the cutting cycle's over. The cutting cycle's over until it's not. Bresky makes a good point because of everything that's happened in the market. And I said this, I think, the last time I wrote a preview for the ECB. You never know what's going to happen very quickly here. I mean, look at the past year. It feels like it's been 5 years, since the change of administration in the U.S. and the change in policies amongst countries in the world politically, and it's having a massive impact on consumer pricing and economies.
From a fiscal perspective, do you think that should help the ECB's case in terms of holding policy where it is? A number of people are looking for just a bit more investment to come through, and again, from a fiscal perspective, to be slightly more supportive or in 2026. This comes despite what some say are high and rising debt levels. Fiscally, obviously, we know what Germany's trying to do. France is a bit more complicated and complex. We saw, again, Italy and Spanish GDP. I know Spain, it came off the boil a bit. I think it came at 0.6 versus 0.8.
Correct.
So is this just a more balanced Eurozone than we've seen of late, in terms of we're not putting all the burden of growth on the two largest economies? We are looking further afield now, and it's looking slightly more balanced. We can't rely on the likes of France now because of their political situation, near term at least, to provide that sort of that impetus and leg up for Germany.
Well, I think that's an excellent question. That begets another
Maybe we
question.
should ask her that.
Well, yeah. That's something she could go on for 15 minutes on and not have to answer questions about monetary policy.
Very
She'd love
true.
it. But I think your point begets a second question: is the eurozone working the way it should? And in that production moves to areas where it costs less. Hey, I'll be blunt. We just bought a car and it was a Skoda. That means it was built in the Czech Republic, right? Or Czechia, I guess it's called now. Seat is one of the biggest selling car models in Europe now too. Those are Volkswagens built in other countries, right?
Yeah.
So yeah, it's good that Spain has that kind of growth, and Germany, the economy here, it's in a transition. What it's going to transition to, we don't know. I mean, they're talking about spending a lot of money on fusion technology, which if it works, they'll be brilliant, and if it doesn't, they'll look like idiots. But think about the money that Germany's going to spend. We're talking $1 trillion and maybe even more. I mean, that's just, it's unprecedented. And high tide raises all boats. Everybody's going to profit from that. All the weapons consortiums in Europe, the big ones, at least, the aircraft side, they have operations in a lot of different countries: Italy, Spain, France, and even the UK. So if on the fiscal side, the spending side, there's always the danger that the debt gets too large.
Yeah.
But you have to spend money to make money.
It's how you manage the debt, really. It matters as much as it does in terms of supply. So it's going to be interesting on that front. Beat, just in terms of the euro's performance, if we look specifically at the euro, obviously there are the external factors. We know the issue at the moment. As we've just discussed about the fiscal side and the French situation, and overnight the Dutch elections that we saw, a very close fought battle from the early exit polls that I saw yesterday. How do you see the euro faring in the near term?
To be honest, I think for once the euro and Europe seems to have one benefit again: they're boring, and I think the boring part is actually suddenly very attractive when you have all that's going on in the US and the unpredictability, let's say, that part. We've seen it with the sort of dollar move this year, which has been, let's say, overseas investors still buying US stocks, except maybe the Sell America month in April. But after that, they still sort of be part on buying US equities, but they're selling the dollar against it. So no one really wants to be part of whatever else they want to be part of when it comes to the US. And this has clearly, the knock-on is the unpredictability, whether it's for businesses or investors, or what Trump's ideas are next. And suddenly, you may remember this year, we have seen moments where we have seen outflows in US bonds. They went straight into bonds and other European stuff, and the euro rallied at the same time. I think this is going to stay here. I'm not going to say euro is now going to 125, 135, whatever. The dollars keep on, going to sell off. But I think as long as the world remains as it is, Europe just has that little bit of luck that it's, like I said before, that they're boring. I just keep an eye on the spreads. We know, we always said for years that the next shoe that would drop would be France, and that'd be quite a big shoe to drop. And somehow they kicked the stuff again into next year. So let's see what happens with the pension reforms. Let's see what happens with the whole politics in France. But for somehow the spreads just, everything we thought this year, that's a problem, this could move, this could be it is for a short bit of time, and as if the market just doesn't want to look at it. I'm not sure what it is, but the problems disappear before they started. If you remember, just last week or the week before, we watched the KBW index again, US regional banks, and that was like on fire for like 2 days, and then the story died. So it's very hard right now to know what the market really is focusing at. And in regard to the euro, I think, we look at the euro sterling, we have big problems in the UK. I think the euro is going to do fine in euro sterling. I think euro dollar is fine because the dollar is going to be, maybe the dollar has a small bounce after this Fed story from yesterday. But generally speaking, I think the euro is just fine. And at least for the next few months, I mean, Eric said it nicely, it's like the last year feels like 5 years, and that's very, very true. And so I just look ahead for the next few weeks and 1 or 2, 3 months where you go like, okay, the story is probably more or less going to be staying the same. And Europe being Europe, they might just, even boring, but they're stable. And I think this is in the current world that we are dealing with. I think stability, even if boring, and it seems the market is not yet too worried that Germany is loading up a lot of debts and so on and so forth. We just seem to still just about be able to kick the can. Having said that, I have been really worried that we're gonna have an issue with the debt situation. I feel we like on this last leg before we have the next sort of crisis, but we all know on here, we've been around long enough to know it's just very hard to time. The rope feels it's getting shorter. What will be the trigger? I don't know. It seems not to be US banking right now. It seems not to be.
It'll be left field. It'll be left field as always. As it always is. There'll be something that's been overlooked and
exactly. So I think I think the euro looks pretty okay. I think the story just gonna tick over as we had it in the last few months, and we just look out for whatever the changing parts are in this sort of game of chess right now. And I think we just need to be a bit more flexible than we had to be, because the Trump administration, 4 years Trump, from Trump 1.0, you just have to be a bit more flexible as things
nimble,
very quickly. Yeah, I would say that. Yeah,
agile.
Agile. There we are.
Yeah,
agile. Right. It's interesting you talk about. I want to go back to the US really, because it is really the pivotal element in everything we're going to see. I don't, obviously Lagarde will bat away any sort of political questions, but we're a long way from finished on the story over Ukraine, Russia at the moment. That's sort of taking a back seat. The next up will be obviously the UK budget, and therefore, like you say, and then there's already worries over sterling and because of what we might see from that at some point. So really, what you're saying then, Beat, is Europe's the port in the storm at the moment, from the trading perspective, and you'd maybe use euro as a pivot point against other pairs or other currencies.
Yeah, pretty much.
Yeah, well said. All right then. Well, listen, I don't. Again, today's decision, as we've sort of laboured the point, unlikely to be very spectacular. But if you want to listen in, have a free trial at livesquawk.com and take out a trial and listen in for the result, which is at 13:15 GMT. So I have to keep getting this right because of the clock changes and everything. 13:15 GMT and was it 2:15? European time?
Yeah, that's correct. Hey, I want to add something before we sign off here. I've been covering the European Central Bank and the Bundesbank for a while. I don't want to say how many years because I don't want to date myself, but I've been around a little bit, right? And invariably, what often happens is when we expect nothing to happen, that's when it all happens. That's when, there's nothing on the docket. Everybody's expecting, smooth sailing, stay the course. And then all of a sudden, the head of the European Central Bank says something and the markets go, what just happened? It's happened a number of times with the speaker, with the president of the European Central Bank. It's also happened with the accounts, right? So you'd never know. I mean, you say, yeah, I'm not going to listen, I'm not going to watch, and then all of a sudden, somebody else.
If I may ask you, Eric, do you have, because sometimes we have a sort of a slight idea where they could trip up. But I totally agree with what you say, and we've seen it in the past. And in the past, some of the events have been accidents because someone like Lagarde wasn't quite savvy enough and fall in the trap of a question by a journalist, which she got a little bit better. Do you think more of an accidental something, or do you actually feel that some errors could actually be a deliberate comment at some point, or you just warning from the general surprise factor?
I think it's all three. Be blunt. And I also think this has something to do with the current environment we're in. I feel like, when I'm covering a news issue or even just walking down the street, my head is more on a swivel than it ever has been, I think. And I also think this has something to do with her and the organization. She is pretty good at putting her foot in her mouth, and that can always happen with her. I mean, I hate to say it, but it's what happens, right? It's happened a lot, like you said, Beat, and you might as well. The probability is much greater than zero that it will happen again. But that said, maybe they're going to use this to roll something else out. Okay, I don't see it coming, right? But to me, it's going to be more accidental. A faux pas answer to a journalist, and all of a sudden it's erratic trading on currency markets. It's happened before. So
yeah, good point. Very good point. Something to keep everyone interested anyway. listening to what she had to say.
Not what I was trying to do, right? Yeah.
Yeah, exactly. Just building it up a little bit.
Yeah, now I definitely gonna listen.
It worked. I'll get my check from them tomorrow.
Yeah, exactly.
Yes. She's no Donald Trump though, so we'll leave it at that. All right, listen, guys, thank you very much for your contribution today. Very much appreciated.
Thank you.
Thanks very much indeed, Harry, for having us, and have a lovely day.
Yeah, brilliant. Thank you. I'd like to say thank you to everyone for listening. And a little note, if you've missed the start of today's episode, you can listen back on X or YouTube, or find us on podcast platforms such as Spotify, Apple or Amazon Music, as well as other places as well. So thank you all for listening. Good luck with today's ECB decision, and we'll see you again for our weekly review tomorrow with a couple of guests. All right, but have a good rest of your trading day, and bye-bye. Thanks for tuning into the Live Squawk podcast. Your edge in the market starts here. Subscribe now.